Hello, everybody. This is Toni Turner, and welcome to the Market Now on Friday, September 26th at about 11:30 a.m. Eastern. Well, consumer sentiment receded in September, though roughly in line with expectations, according to the latest reading from the University of Michigan. Inflation expectations held fairly steady, with the one-year outlook at 4.7% and the five-year at 3.7%. And on that note, let's go on to three charts that could give us some insight into the week to come. First of all, as we usually do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. Of course, this is the exchange-traded fund that closely follows our benchmark S&P 500 index. And really, as traders and yes, even investors, the SPY is like a thermometer. It shows us the mood and manner of the market. And when it's moving higher, many stocks will follow it higher. And when it's moving lower, almost all stocks will follow it lower. So it's kind of nice to know, or very smart to know, what's going on with the SPY, especially if you're trading. So looking at this daily chart of the SPY, the ETF, again, I said, that closely follows the S&P 500 index. When I captured this chart today, you can see it over here. I know it's kind of hard to see. When I captured this chart today, the SPY was trading at $658 and change, just below Monday's all-time high, right at $667. So it's trading, the SPY is trading still, you can see, above its 20-day moving average, the red line now coming in at $655, the red line down here. The 50-day moving average, the green line coming in at $644, and the 200-day moving average, the black line, coming in at about, well, it's $599.83. We can call it 600. Now, we know that back here, and you can't see it now on the chart, but back here in February of this year, at that time, the SPY had an all-time closing high at $613. Now, from there, the SPY rolled over really dramatically, and everything else did too, and dove to that April 7th low down here. It dove down to 482. Then it bounced up, couldn't get over the 20-day moving average, pulled back a little bit, and then crossed up over the red line, the 20-day moving average, the green line, and from there, for about 6 months now, has pretty much just walked up this 20-day moving average just about as neatly as anyone could wish for. We had a little move down here to 619, a little drop there in July, just barely under it here in August, and again a little tiny fall, but back up again, and a little further on in August, and again to where we are now at about 658. So, and this move, by the way, from down here in April to all the way up to where we are now, this is a 36% gain, nothing to sneeze about. Very strong uptrend, very strong higher lows and higher highs all the way up, especially staying above that 20-day moving average. You can see how it acts as support many, many times over on this uptrend. Now we say, what do we do with this chart? Where do we go from here? First of all, we look to see the resistance here. The only resistance on this chart is at this week's prior highs, so we'll call that 667, 668. We have, again, potential support down here at the 20-day moving average at 655, the 50-day moving average at 644. We have that pivot down here at 619. And we have, of course, the 200-day moving average coming in here at about 600. And we look at these moving averages and indeed price support, because many times if a certain index or asset stock rolls over, It will use, as you can see many times over, it's used the 20-day moving average, moving all the way up from that April low. Certainly the 50-day moving average comes in handy as potential support, and as well as many times what was resistance will become support and the other way around. So that's why we have this 619 level, and of course the 200-day down here. So all of these are potential support should the spider roll over a little bit here. And quite honestly, I know I've been saying this now for about the last month and a half, but markets don't go up forever. I've been watching them for 25 years, and as good as everything sounds, at times you just have to take a breath. So I've been taking profits recently on overbought short-term trades if they're really, really soaring and way above the RSI, the 14-day RSI line, and straight up and gapping way up. I've been taking profits on those trades. We could see the market slow down a little bit here, and I just want you to be aware of that it could happen. Okay, so let's go on to our next chart. Our next chart today is our usual Invesco QQQ, symbol QQQ, that daily chart. This is the ETF that follows our NASDAQ 100 index, the top 100 non-financial stocks in the NASDAQ stock market. This is where all the big momentum stocks sit, including Meta, Alphabet, Apple, Microsoft, the whole group. So when I captured this chart today, the QQQ was trading at $592, down a few points from this week's all-time high up here at about 603. So the Qs are also, of course, trading above their 20-day moving average, which is coming in at 585, above their 50-day, the green line moving average, which is coming in at about 575. And looking down here to the black line, the 200-day moving average coming in at about 525 right now. So if we look back left on this chart here, we can't see the numbers anymore, but back in February, it's like everybody made the all-time highs at that time back in February. The Qs made an all-time high at that time of $539. And then rolled over. And again, it's like almost all stocks, indexes, everything rolled down to these April 7th lows. The Qs fell down to 402, then rallied up hard like the SPY, couldn't get over that 20-day moving average. Once you get below it, then it acts not as support but as a ceiling many times. Did a little pullback here, and then the Qs made a dramatic recovery, moving up back through the 20-day and the 50-day, which by then were inverse to the 200-day, up through the 200-day moving average. And then the Qs, these are all the big tech stocks, remember that, walked up the 20-day moving average for about 6 months to where we are now, had that little pivot there at the very end of July, 1st of August, but climbed back up. Dropped down a little bit going through August, dropped down a little bit at the end of August, but hardly anything to talk about, and then moved up to where we are now. And as I always say, these moving averages can act like a staircase. When we start up a staircase, our legs are strong, and maybe we pull them up and pull our knees up high and go up the staircase at a very quick pace, but the longer the staircase keeps ascending, a little more tired our legs get, just like price does the same thing. It starts getting tired as it continues to move up the moving average staircase, and it always happens. And I mean, for the longer it stays above, the longer it stays in an uptrend, the kind of more, I'm going to say tired it gets, although this is a magnificent move we've had here since the end of August into September. We'll have to see what happens next. But anyway, walked up the 20-day moving average again to where we are now at 592. And that's been a 45% run up. So again, absolutely fantastic. Now we see, what do we have here? What do we do with this? We know that we have potential resistance here at the highs at 603, 604. We have potential support down here at the 20-day moving average at 585. We have back here, we have the August highs coming in here. That can also act as support. At 584, we have the 50-day moving average coming in at 575. And of course, back here, we can look at the June highs as potential support right here, coming in at 539, 537 right here. That's potential support with, of course, the 200-day moving average down below, again, at 525. A lot of times what I will do is I will take these potential support zones here, and I'll actually write them down on a pad of paper next to my desk, and to make it easy to glance at, if the market does decide it needs to slow down here. So do keep in mind that next month, October, we're going to be going into third quarter earnings season. That always keeps the market on edge. So with that and everything that's going on, please stay tuned and remember to keep an eye on your protective stops. Our final chart today is a daily chart of the Utilities Select Sector Spider Fund. The XLU is the symbol. It has 31 holdings. Top holdings include NextEra Energy, Southern Company, Constellation Energy, Duke Energy, American Electric Power Company, and so forth. Now, when I captured this chart today, the XLU was trading at $86.30. We see here that the 50-day moving average is inverse to the 20-day, and that's because of this quick move here in August where it rose up and then fell pretty hard. That dragged the 20-day down below the 50-day, but it looks like it's going to recover here. So we have the 50-day coming in at 85, the 20-day at 84, and the 200-day down here at about $80 and change. So I've been looking at the XLU. Last year has been very tough on the utility sector, as most traders and investors, of course, have been focused and putting their money on AI and technology. That's obvious. So it's been very hard on utilities. Everybody is, and understandably so. Utilities usually dawdle around when the market's in a very strong uptrend, especially with technology. But now, as it looks like the market may be ready just to pull into a rest stop, this less volatile sector can be a good place to kind of check out for a place to sit and watch the action. I often remind my traders, success isn't always all the money you make. A lot of times success is the money you don't lose. So the utilities we call sometimes like a safe haven, not to say they can't go down. They can go down. But you're getting a good return and good yield, and it's a place that's a little not quite so volatile as the rest of the world sometimes. So we're looking here at the XLU. Look left on the chart with me. We know that the April 7th low came in. And by the way, back here on the chart, you can't see the XLU wasn't way up here like everybody else. It was down and struggling because, again, utilities weren't in a favored place when tech stocks are roaring to new highs, and that's understandable. So anyway, back here on April 7th, the XLU made a low at 71 down here. Then it rallied and rose. It rallied through the moving averages. Its moving averages moved up here, rose up to 86 in the beginning of May. Then pulled back a little bit. Then came back up and rose up to, where am I here? Pulled up here to 87. Wait a minute. Right here, I'm sorry, this was not 86. That's not what I meant. That's not the high I meant. I meant it walked up the 20-day moving average, consolidated for a while, then rose up here. That's where I wanted, to 86. Pulled back a little bit, then pulled back to 87. then consolidated into what was a rising 20-day, started going sideways a bit, makes sense, consolidated into that, then came down, fell through the moving averages down here to 82, then popped up from there, and again to where we pulled back a little bit, stayed over the 20 and 50 day to pop up where we are now, again to where we are now at $86.30. If in the coming week, I like this pattern, if in the coming week the XLU can stay above its 50-day and 20-day moving averages, I'm just going to call it $85 here. If it can stay above $85, and if the market looks reasonably sane, I will buy a position of the XLU in my portfolio, and I'm going to put a stop down here at $83.75. If and when the XLU can close above 88, which was this last high up here, if it can close above 88, I will add to my position, and my stop will be a trailing stop. So you may want to keep an eye on the XLU in the coming week. And now, please know that at ToniTurner.com, we've lowered the price of all of our online training programs to make them more accessible to everyone. So if you'd like to become a more profitable trader, now is a great time to check out my timeless training programs. In my program, How to Bottom Fish Like a Pro, you will discover a simple yet very profitable strategy that all traders and investors want to know. Everybody wants to know how to buy low and sell high, don't we all? So I'm going to show you in this program an easy-to-learn step-by-step process that tells you when to enter an undervalued stock, how to manage the position, and as you see certain signals that the uptrend is about to end, when to take your profits. Our new low price for this program is only $199. It's very, it has a tremendous amount of content. It's very good. And by the way, some of my trainings here are priced at only $59. When you order, you'll receive special bonuses, including 1 month of Metastock daily charts or Metastock real-time charts for free. And once you purchase, you'll have unlimited access. You'll learn at your own pace. From our ever-popular 7 steps to successful trading, down to how to swing trade successfully, again, one of our most popular programs, how to trade the trend to profits, how to read charts, great for novices, 3 winning setups, also good, and again, how to bottom fish like a pro. Discover how my online programs can help you earn more money quickly and easily. Check them out now by going to the link on this screen up here, or easier still, just click on the orange button below. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.